everybody, welcome back. I first off wanted to just say thank you all for joining and watching my YouTube videos. It's been a learning experience for sure. I'm not used to filming and seeing myself on camera. I'm more used to playing volleyball and going golfing. So if you have any interest in that as well, let's go do that. And let's talk about this while we're participating in some fun activities, because those are two things I really enjoy. But anyway, today I was just wanting to elaborate on the one-time close loans and also the renovation loans. I'm going to kind of cover them together just because they kind of are handled the same way. A little bit different of process and total different programs, but they kind of are handled the same. So with a one-time close deal, well, with both of them, you kind of have to get your updates and your construction and all that figured out. So with the one-time close deal, let's just start there. With the one-time close deal, you need to find a builder. It cannot be you as the soon-to-be homeowner. It has to be external of you. The builder has to get approved by our agency who does this. Our lender that actually handles these programs has to approve them. So there's a little packet they have to fill out showing their experience. It's kind of like a short little resume to get them approved in the system if they're not already. And then the next step is just to kind of get those numbers down. So what is the land going to cost you? You can already have owned the land. You can have own it in full. You can have a loan on it, or the builder can purchase it at the same time as their build. So there's 3 different ways you can do the land purchase. If you own it, there's a little bit more that goes into it. You already have equity into the property that you can utilize as your down payment if you get an appraisal on it and it's high. So that's a plus. But once we get those numbers figured out, then we basically submit the loan. We get you as the borrower approved, pull your credit, do all of those things, get it submitted to the lender, just like any other loan that you would do. The cool thing about the one-time close is you don't have to get your construction loan external of your permanent loan. So that's why they call it a one-time close. You do that all together. So you get approved once, we pull credit once. It typically takes 60 to 90 days for this process, depending on how quickly the builder gets us things, how quickly you get us things, and then the underwriters get through the whole process. So it can be 60 days. And in that 60 days, we close the loan, and then you start paying on the interest. You as the borrower start paying on the interest on whatever is drawn on that loan. So the builders themselves get draws throughout the process. And as they do those draws, your interest-only payments will go up. But that's the same as any other construction loan. The only difference, and the cool difference on this, is that you only have to go through the approval process once as the buyer, soon to be homeowner. So that's pretty cool. You start making those payments, and then once the construction work is done, we get that certificate of occupancy, we get that final appraisal, and then you start paying on the mortgage just as you would any other home purchase. So one-step process, pretty freaking cool. And you're done. Moving on to the renovation loans, it's similar. You got to find a contract worker who does the work, who's going to do the work, who can get you a bid for what it's going to cost you to do a new roof, to do, maybe you need to remodel the kitchen, maybe there's something leaking in the basement that needs fixed. I mean, there's a million things that could probably go wrong or be wrong with a home that needs renovated. The cool things about the renovation loan, though, is that you can purchase it and do that work after the loan closes. So it's similar to the one-time close we just talked about. You get those renovation costs up front. We roll them into the loan. We close on the loan, and then you have... Well, y'all, talk about bad timing for technology to crap the bed. Anyway, to finish out what I was trying to say, if you have the renovation loan, you close the deal just like normal, and you start paying on that loan. That mortgage loan is going to take place just like any other loan. You have on a renovation loan, I mean, they like you to do it as quickly as possible, but 2 to 5 months is typical what they give for renovation. It's all dependent, circumstantial, so each circumstance is different. As well as the amount of renovation needed. So it's a case-by-case basis. And with the construction loan side, they typically like to keep it under 6 months, which I know in this time of era we're in with supply chain and whatnot, that's kind of unlikely. So 12 months is the max on those, but 8 months is kind of the norm. Again, case-by-case scenario basis, but we will cross that bridge when we get there. So I hope to hear from you, and let's close some construction loans. Let's get those going, because that's going to be the up and coming thing for this year. From what I hear, with the market being where it is and the low amount of homes on the market, a lot of people are going to turn to building. So keep me in mind when you do. I'd love to help you out. Have a great evening, you guys. Bye.